This implies a downward revision, especially for 26, reflecting the global effects of the war on commodity markets, real incomes, and confidence. At the same time, low unemployment, solid private sector balance sheets, and public spending on defense and infrastructure should continue to underpin growth. In line with our monetary policy strategy commitment to incorporate risks and uncertainty into our decision-making, staff also assessed how the war in the Middle East could affect economic growth and inflation under some alternative illustrative scenarios. These scenarios will be published with the staff projections on our website. The scenario analysis suggests that a prolonged disruption in the supply of oil and gas would result in inflation being above and growth being below the baseline projection. The implications for medium-term inflation depend crucially on the magnitude of indirect and second-round effects of a stronger and more persistent energy shock. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. So I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the economy grew by 0.2% in the fourth quarter of 2025, driven by stronger domestic demand. Households increased their spending as real income rose and unemployment remained close to its historical low. Construction and housing renovation strengthened, and firms invested more, particularly in areas such as research and development, software and databases. Growth was no longer weighed down by net exports as it had been in the previous 2 quarters. It was underpinned mainly by services. Staff still see private consumption as the main driver of growth over the medium term. Investment should also continue to grow, with governments spending more on defense and on infrastructure, and firms increasingly investing in new digital technologies. The external environment remains challenging, including in light of volatile global trade policies. The war in the Middle East is disrupting commodity markets and weighing on real incomes and confidence.
Under a sky held high by the sun, we bring you back to the seed of nourishment. More than a spoonful of suk, relish an energized lifestyle. Aligned to the soundscape of your prana, cushioned by the comfort of a paradise, where our guiding hands uplift you through soil and stone. A bahar of shared wisdom awaits you. Spaces that hold meaningful silences. An utsav of divinity and and intellect. Rooted in savor and gratitude, we look forward to immersing you in a journey of abundance. Swastik.
म्यूजिक तो अलावा मेरा दूजा प्यार मैं नहीं बताऊंगी. चलो फिर शुरू करते हैं स्पॉटिफाई के नाल गलबात. आ जाओ. चल जाट गले जाटनियां, चल जाट गले जाटनियां, सर पे दुपट्टा लेके जाट गले जाटनियां, सर पे दुपट्टा लेके जाट गले जाटनियां. सब तो पहला ਜਦੋਂ ਮੈਂ ਗਾਣਾ ਲਿਖਿਆ, ਉਹ ਗਾਣਾ ਨਹੀਂ ਸੀ, ਉਹ ਇੱਕ ਕਵਿਤਾ ਸੀ. ਕਦੋਂ ਏਦਾਂ ਨੋਟਬੁੱਕਸ 'ਚ ਲਿਖਦੀ ਮੈਂ ਗਾਣੇ ਕਦੋਂ ਲਿਖਣ ਲੱਗੀ ਮੈਨੂੰ ਪਤਾ ਵੀ ਨਹੀਂ ਲੱਗਿਆ. ਤੇ ਇੱਕ ਹੋਰ ਸਟ੍ਰੇਂਜ ਚੀਜ਼ ਸੀ ਕਿ ਜਦੋਂ ਮੈਂ ਰਿਲੇਟਿਵਸ ਦੇ ਘਰੇ ਜਾਣਾ, ਕਿਸੇ ਦੇ ਘਰੇ ਜਾਣਾ, ਮੈਂ ਕਹਿਣਾ ਮੈਨੂੰ ਇੱਕ ਕਾਪੀ ਪੈਨ ਦੇ ਦਿਓ. ਗਵਾਹ ਨੇ ਉਹ ਲੋਕ, ਗਵਾਹ ਨੇ ਉਹ ਰਿਸ਼ਤੇਦਾਰ. ਅੱਜ ਮੈਨੂੰ ਕਹਿ ਦਿੰਦੇ ਨੇ ਕਿ ਅੱਜ ਸਾਨੂੰ ਉਹ ਚੀਜ਼ ਸਮਝ ਆਈ ਹੈ ਕਿ ਤੂੰ ਕਾਪੀ ਪੈਨ ਕਿਉਂ ਮੰਗਦੀ ਸੀ, ਕਿਉਂਕਿ ਤੂੰ ਇਹ ਕਰਨਾ ਸੀ. ਪੈ ਗਿਆ ਭੁਲੇਖਾ ਤੈਨੂੰ ਕਾਹਤੋਂ ਲੱਗਦਾ ਹੈ ਕਿ ਤੇਰੀ ਚੱਲੀ ਜਾਨ ਤੁਹਾਨੂੰ ਯਾਦ ਰਹੀ ਹੈ. ਨਿੰਮਾ ਲੋਹਾਰਕਾ, ਗੁਰਵਿੰਦਰ ਜਿਹੜਾ ਨਛੱਤਰ ਬਾਈ ਦੇ ਗਾਣਿਆਂ 'ਚ ਹੁੰਦਾ, ਰਾਈਟ. ਸੋ ਇਹ ਜਿਹੜੀਆਂ ਚੀਜ਼ਾਂ ਨੇ ਵੀ ਇਹਨਾਂ ਦਾ ਤੋੜ ਨਹੀਂ ਹੈ ਕੋਈ. ਆਈ ਡੋਂਟ ਫੀਲ ਕਿ ਆਪਾਂ ਤਾਂ ਖੁਦ ਇਹਨਾਂ ਨੂੰ ਸੁਣ ਕੇ ਵੱਡੇ ਹੋਏ ਆ ਨਾ ਬਲਿੰਗ. ਨਹੀਂ ਮਿਊਜ਼ਿਕ ਤੋਂ ਇਲਾਵਾ ਦੂਸਰਾ ਪਿਆਰ ਮੈਨੂੰ ਲੱਗਦਾ ਹੈ ਮਤਲਬ ਮੇਰੀ ਗੱਡੀ ਲਾਈਕ ਸਾਡਾ ਜਨਮ ਤੱਕ ਸਾਥ ਨਿਭੂਗਾ. ਬੱਕੀ ਨੇ ਮਿਰਜੇ ਦੀ ਬੱਕੀ ਨਾਲੋਂ ਘੱਟ ਥੋੜੀ ਹੈ ਮੇਰੀ ਗੱਡੀ. ਨਾ ਉਹ ਇੱਕ ਕਿੱਕ ਮਿਲਦੀ ਹੈ, ਮਤਲਬ ਫਾਕੇ ਵੱਢਦੀ ਜਾਂਦੀ ਹੈ. ਫਾਕੇ ਯੂ ਅੰਡਰਸਟੈਂਡ. ਫਾਕੇ ਚੱਟੀ ਐ ਬਰੂਦ ਵਰਗੀ ਰੱਖ ਰੌਂਦਾ ਨਾ ਯਾਰਾਨੇ ਲਾ ਕੇ, ਫੁੱਲ ਤੇਰੇ ਸੜ ਜਾਣਗੇ, ਤੇਰੇ ਫੁੱਲ ਤੇ ਸੜ ਜਾਣਗੇ ਮੇਰੇ ਹੱਥਾਂ ਵਿੱਚ ਆ. ਬਹੁਤ ਸਾਰੇ ਏਦਾਂ ਦੇ ਐਸਪੈਕਟਸ ਨੇ ਜਿਹੜੇ ਹਜੇ ਮੈਂ ਲਿਖਣਾ ਚਾਹੁੰਦੀ ਆ. ਹਜੇ ਵੀ ਜਿਹੜਾ ਟੌਪਿਕ ਮੈਨੂੰ ਲੱਗਦਾ ਵੀ ਚੰਗੀ ਤਰ੍ਹਾਂ ਲਿਖ ਨਹੀਂ ਪਾਈ, ਉਹ ਟੌਪਿਕ ਇਹੀ ਹੈ ਵੀ ਔਰਤ ਦਾ ਸੰਘਰਸ਼. जब हम थे तब सिर्फ हम थे, लेकिन जब से हम आए तब से सब आए.
This has led to a downward revision of consumption and investment in the baseline staff projections, especially for 2026. The impact would be even more pronounced in alternative scenarios with a more severe and prolonged energy shock. The Governing Council highlights the urgent need to strengthen the euro area economy while maintaining sound public finances. Any fiscal responses to the energy price shock should be temporary, targeted, and tailored. The current energy crisis underscores the imperative to further reduce dependence on fossil fuels. Completing the Savings and Investments Union is vital to fund innovation and support the green and digital transitions. The digital euro and tokenized wholesale central bank money will enhance Europe's strategic autonomy, competitiveness, and financial integration, and will boost innovation in payments. It is thus essential to swiftly adopt the regulation on the establishment of the digital euro. Simplifying and harmonizing rules across the EU's single market will help European firms grow faster. Looking now at inflation. So inflation rose to 1.9% in February from 1.7% in January. Energy prices were 3.1% lower than a year ago, after having been 4% lower in January. Food price inflation edged down to 2.5%. Inflation excluding energy and food increased to 2.4% in February from 2.2% in January. The increase reflected goods inflation rising to 0.7% from 0.4% and services inflation moving up to 3.4% from 3.2%. Indicators of underlying inflation have changed little over recent months and remain consistent with our 2% medium-term target. Corporate profits recovered further in the fourth quarter of 25, while unit labor costs rose at a similar rate as in the previous quarter. Growth in compensation per employee slowed to 3.7% from 4% in the third quarter. Negotiated wage growth and forward-looking indicators such as the ECB wage tracker and surveys on wage expectations suggest that labor costs will ease further in the course of 2026, which should support the return of inflation to target. The increase in energy prices caused by the war will drive inflation above 2% in the near term. If persistent higher energy prices may lead to a broader increase in inflation through indirect and second-round effects, a situation which requires close monitoring, inflation expectations in the financial markets have moved up significantly over shorter horizons. Most measures of longer-term inflation expectations stand at around 2%, supporting the stabilization of inflation around our target.
The engine of PSU banks runs through these 12 giants. Are you on board? Presenting ICICI Prudential Nifty PSU Bank ETF, a focused way to tap into the strength and scale of India's public banking sector. This ETF tracks the Nifty PSU Bank Index, which includes 12 large liquid public sector banks from the Nifty 500 universe. These institutions form a financial backbone of India's economy, playing a pivotal role in credit expansion, infrastructure lending, and financial inclusion. This ETF invests in the same stock and in the same proportion as the index, aiming to provide returns that closely correspond to the returns provided by the index, subject to tracking error. So why consider this ETF? You gain exposure to the government-owned banks that are integral to India's economic growth engine. You have access to diversified portfolio of 12 PSU banks, helping reduce individual stock risk. It positions your portfolio to potentially benefit from economic reforms, rising credit demand, and ongoing policy support. It is relatively low cost as compared to actively managed funds. And lastly, they trade easily on the stock exchange with real-time pricing during trading hours, making them liquid. So who is this ETF suitable for? This ETF is ideal for investors looking for targeted exposure to India's PSU banking sector with a potential long-term wealth creation outlook and have the ability to bear sector-specific ups and downs. The recommended investment horizon is 5 years and above. To sum it up, here are some of the key benefits of ICICI Prudential Nifty PSU Bank ETF. So if you want to invest in the financial pillars of India's growth story, ICICI Prudential Nifty PSU Bank ETF could be your next step, focused and aligned with India's future. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
बेटा आप फैंसी ड्रेस कंपटीशन में क्या बनोगे?
मैं ट्री बनूंगा।
बेटा आप क्या बनोगे?
मैं सन बनूंगी।
बेटा आप क्या बनोगे?
मैं पड़ोस वाली आंटी बनूंगी।
बेटा आप फैंसी ड्रेस में क्या बनोगे?
मैं सब कुछ बनूंगा। I am cool like a swimming pool, कभी tough like a cricket pitch, smart like a library, fit as a gym, and with unlimited possibilities.
सिर्फ 4 दीवारें नहीं, आपकी दुनिया बड़ी होनी चाहिए। Gores, your own world.
Let us now turn to our risk assessment. The risks to the growth outlook are tilted to the downside, especially in the near term. The war in the Middle East is a downside risk to the euro area economy, adding to the volatile global policy environment. A prolonged war could increase energy prices further and for longer than currently expected, and also weigh on confidence. These factors would erode incomes and make firms and households more reluctant to invest and spend. A worsening of global financial market sentiment could further dampen demand. Additional frictions in international trade could disrupt supply chains, reduce exports, and weaken consumption and investment. Other geopolitical tensions, in particular, Russia's unjustified war against Ukraine, remain a major source of uncertainty. By contrast, growth could turn out to be higher if the economic repercussions of the war in the Middle East proved to be more short-lived than currently expected. In addition, planned defense and infrastructure spending, reforms to enhance productivity, and euro area firms adopting new technologies may drive up growth by more than expected. New trade agreements and a deeper integration of the single market could also boost growth beyond current expectations. The risks to the inflation outlook are tilted to the upside, especially in the near term. A prolonged war in the Middle East could lead to a larger and longer-lasting upward shift in energy prices than currently expected, raising euro area inflation further. This could be reinforced and become more persistent if inflation expectations and wage growth were to rise in response, if the energy price increase were to spill over to non-energy inflation to a larger extent than assumed in the baseline, or if the war disrupted global supply chains more broadly. Ongoing trade tensions could also give rise to more fragmented global supply chains, curtail the supply of critical raw materials, and tighten capacity constraints in the euro area economy. By contrast, inflation could turn out to be lower if the economic repercussions of the war in the Middle East proved to be more short-lived, or if indirect and second-round effects proved less pronounced than currently expected. Inflation could also be lower if tariffs reduced demand for euro area exports by more than expected, and if countries with overcapacity increased further their exports to the euro area. More volatile and risk-averse financial markets could weigh on demand and thereby lower inflation.
सब्जी बनाने का टाइम हो गया लगता है।
मतलब अब हमारे
as well. So looking at the financial and monetary conditions, the war in the Middle East has had a pronounced impact on global financial markets. Overall, financial conditions have tightened since our last meeting. Stock markets have fallen, and market interest rates in the euro area, especially short-term rates, have risen notably. In January, bank lending rates for firms and the cost of issuing market-based debt both remained at 3.6%, while the average interest rate on new mortgages edged up to 3.4%. Bank lending to firms grew by 2.8% on a yearly basis in January, down from 3% in December. However, this was offset by stronger issuance of corporate bonds, with the annual growth rate rising to 4% from 3.5% in December. Mortgage lending grew by 3%, unchanged from December. So in conclusion, the Governing Council today decided to keep the three key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions.
And the first question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much, President Lagarde. I have two questions, obviously. So the first one is how the discussion went inside the Governing Council regarding the very uncertain outlook for monetary policy, whether you are all in one camp or whether there is perhaps a range of opinions. Second question is on the markets, because the markets are trying to understand how fast you're willing to act. You were quite fast in the projections already reflecting the changed situation, I would say. So is it the next meeting, perhaps, we're going to see action? And when the medium term obviously is a longer term, but when do you think it is time to act? Thank you.
Looking to add sector-focused exposure to your portfolio with India's top banks? Presenting ICICI Prudential Nifty Bank Index Fund, a relatively cost-effective way to get exposure towards the Indian banking sector through a single fund. This sectoral index fund tracks the Nifty Bank Index, which comprises 12 of the most liquid and large banking stocks listed in India. The index includes prominent names from the Nifty 500 universe, offering diversified exposure across major private and public sector banks. The scheme invests in the same stocks and in the same proportion as the Nifty Bank Index, aiming to achieve returns of the underlying index subject to tracking error. So why consider this scheme? It provides exposure to India's banking sector, one of the key drivers of economic growth. There is no need for active stock selection or tracking since the fund passively replicates the index. It is relatively low cost as compared to actively managed funds. And lastly, it can be purchased even without a demat account. So who is this scheme suitable for? This scheme is ideal for investors seeking to add targeted sectoral exposure, specifically in banking, and are comfortable with the risk of investing in a single sector. The recommended investment horizon is 3 years and above. To sum it up, here are the key features of ICICI Prudential Nifty Bank Index Fund. So if you're looking to invest in banks powering India's economic momentum, ICICI Prudential Nifty Bank Index Fund could be your next investment step. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
डेढ़ 2005 वाले कुनाल, फाइनली तुम्हारी डेब्यू फिल्म लीड एक्टर आ गई। I still remember, हीरो लगने के लिए तुमने द रेमंड शॉप से एक नया सूट सिलवाया था, अपना फर्स्ट सूट। हेयर स्टाइल, लेकिन कहानी में ट्विस्ट है। लाइफ में काफी अप्स एंड डाउन्स आएंगे, but things will work out. Just be confident. आज भी अपना प्रीमियर है दूसरी पिक्चर का, but as a director. इस बार सूट रेडीमेड है, लेकिन कॉन्फिडेंस सेल्फ मेड। रोल्स बदलते रहेंगे, but one thing will remain constant: the Raymond shop. Because confidence begins with the right attitude and the right suit.
Thank you very much for your two questions. Let me give you a little bit the ambiance and the process through which we went in the last couple of days. We had in-depth discussion on the current situation, and we are ever so grateful that our staff was able, at the risk of having zero weekend and very, very short nights, was able to provide us with a baseline and scenarios, the overall projection efforts, as at March the 11th. This is very unusual. And I'm specifically included in the monetary policy statement that this is exceptional. I don't wish to impose that exercise on a regular basis, but this was the information from which we could actually discuss in depth. We went a bit further than that, and we managed to make sure that the members of the Governing Council were extensively briefed by experts. We had a defense and military affairs professor who briefed us the day before the Governing Council meeting, and by the randomness of calendar scheduling, we also had a very good presentation of climate change impact on the ocean. And it's not unrelated in many ways. But it's totally random, I can assure you. So I think my goal and the goal of the executive board was to make sure that governors were starting from the best informed basis to hold their in-depth discussion. And I would characterize the overall mood of the group as being calm, being determined, and being laser focused on the information that we have, the projections that we received, and all data that can be analyzed and factored into our decision-making process. Our decision was unanimous. So you asked me about a range of views. There was no range of views. It was a unanimous decision that was taken not to move rates at all.
Under a sky held high by the sun, we bring you back to the seed of nourishment. More than a spoonful of suk. Relish an energized lifestyle.
aligned to the soundscape of your prana, cushioned by the comfort of a paradise, where our guiding hands uplift you through soil and stone. A bahar of shared wisdom awaits you. Spaces that hold meaningful silences. An utsav of divinity and intellect. Rooted in seva and gratitude. We look forward to immersing you in a journey of abundance. Swastik.
We are going to continue doing what we have been doing. And that's addressing the second part of your question. You know, we are starting from a good base. So I'm not saying that we are in a good place. We are well positioned. And actually you find that in the monetary policy statement. I think we are both well positioned and well equipped to deal with the development of a major shock that is unfolding. And we will continue doing that. You probably have heard me ad nauseum say, meeting by meeting, data dependent, no preset pace. And this was embedded in our strategy review of last July. But I'm so pleased that we finalized our agreement to operate on that basis, which is proving extremely helpful. Because at the time, we anticipated that we would be facing a succession of shocks, possibly in, closed sequence. And this is what we are seeing at the moment. So that's what we will do, which explains that I cannot give you a timeline, a date, but I can assure you that we will proceed on the basis of this analysis and on the basis of the hard work produced by staff to make sure that we have not only the baseline you will see after this press conference, because it will be published, but also the scenarios that you will also see after the press conference, because it will also be on the website. Thank you.
Next question is for Balázs Korani of Reuters. Balázs, please.
Good afternoon. Thanks for taking my questions. First one is about your reaction function. If you could explain that a little bit. What would trigger ECB action? Are you looking at expectations? Are you looking at core inflation? Is it wage growth that needs to move? What is it that would get the ECB to actually act? The second is, could you please preview the alternative scenarios for us? I'm curious about the adverse scenario. What does it look like? How high inflation goes? How long would it take to fall back? And how much of the energy shock would translate into core inflation?
Yeah. Okay. Okay, well, I hope everybody else will be patient, because I might take a little longer than I normally take, but I hope it informs all of you. So, as I said, we will continue to apply the 3 key principles that I have outlined. And being data dependent will lead us to look at everything that we normally look at. But we will be particularly attentive to a number of things. And that's, I think, the point in your question. We will be particularly attentive to developments in all commodity markets. We will be particularly attentive to supply bottlenecks. We will be particularly attentive to selling price expectations of firms. And, through the corporate telephone survey in particular and other surveys that we hold in of good value, we can assess how often price revisions will take place. That will be important. We will be particularly attentive to all demand indicators, be it PMIs, consumer confidence, etc. We will be particularly attentive to wage trackers. Because what we want to really come back to is these 3 key points that I have mentioned and that are also in the monetary policy statement. All of that which is unfolding at the moment, which is a severe shock, will depend on the duration, the intensity, and the propagation. And by propagation, I mean the indirect effects and the second round effects. And we need to have the best sensors and the best way to anticipate where these indirect effects and where these second round effects are going, if at all. That's what we will be attentive to. Now, I'm going to try to take you through a little bit to the scenarios, but I very strongly encourage you to look at the material that we will be releasing after this press conference, which will be far more detailed and informative. But essentially, the work that was done by staff is the following. Number one, they did a first baseline as at March 4th, which would have been normal exercise. And that will be available as well in what we publish later today. But that was very quickly superseded by the turn of events. So they did a second baseline as at March 11th. And that is the baseline that we hold as our baseline in our projections. And you will find, all the hypotheticals that are used there in terms of the price of oil, the price of gas, and the duration of the shock and the propagation. And there is a bit of propagation, actually. Some of it being judgmental, some indirect effects, some secondary effects as well. And then they produced 2 scenarios. One is the adverse scenario, and the other one is the severe scenario. Now, you will ask me, what's the difference between the 2? In the severe scenario, the price of oil and gas goes significantly up and higher than in the baseline, but it falls back to March 4th baseline pretty much at the end of our projection horizon. On the other hand, the severe one, it goes up as well, a little higher than in the adverse, but it doesn't fall back very fast. So it stays high for a longer period of time, and it settles at March 4th baseline beyond the end of our projection horizon. That's one of the key differences. And obviously, given the hypotheses that are taken, the impact on inflation, on growth, are different and are higher on inflation and lower on growth. But I'm not going to give you, the year-by-year details of those consequences. You will find that in the scenarios. But it's a significant difference.
Next question goes to Jana Rando of Bloomberg. Jana, please.
Good afternoon. 2 questions. How are the lessons of the 2022 inflation shock informing your approach to the current crisis? You've said in the run-up to the meeting that you won't allow the same kind of inflation to materialize again. So I'm wondering whether your threshold is lower than in the past and potentially also a bit closer. That would be my first question. And the second one relates to the core inflation projections. I noticed that they are above 2%, not much, but they are above 2% throughout the forecast horizon. And I'm wondering if those are all ready second round effects. And more generally, I would be interested in how you feel about those projections. in relation to your mandate? Thank you.
I feel very proud of our staff, that I can assure you, because I don't think that there are many other central banks that have had the courage to try to, cut off at March 11th and produce the set of data that we have had available. That's how I feel. So,
GoDaddy has the perfect hosting plan for any website, from low-cost shared hosting to your own virtual server. Every plan comes with a 99.9% uptime guarantee along with a free domain name and award-winning support. No wonder we are the world's #1 web host. Unlock your online potential today with GoDaddy.
From 2022 to now, 4 years later, I would characterize our current position as, I would have two characteristics. One is, I think we are well positioned, and I would call it the 3 times 2. 2% inflation at around target medium term, 2% medium term inflation expectations, and 2% interest rates. So target, broadly neutral. That leads me to say that we start from a good position, and we are well positioned to demonstrate our capacity to apply our strategy and to be agile, to do what is necessary. Because second point, we are determined to ensure that inflation stabilizes at 2% medium term. This is our commitment. When I say also that we are well equipped, I think that, in those 4 years, we have learned, we have improved our models, we have changed our strategy, and we are now in particular more attentive to risks around the outlook. We are developing scenarios, sensitivity analysis to make sure that we are, as well informed as possible in order to assess the situation. So I would say that this enables us to better understand and better make our determination. I think we also understand better the mechanism of the pass-through into indirect and second round effects. So on your second question, as I said, I'm proud of the projections that have been delivered. Granted, on core, we are 2.1 in 2028. You have to remember that we include in that ETS2 applying as of 28, and you still have a little bit of remaining of the base effect and a little bit of second round.
The next question goes to Elisa Piazza of CNBC, Class CNBC. Elisa, please.
Thank you for taking my question. So, my first question is, how concerned is the ECB about private credit in the US? So, do you see potential contagion risks in the broader financial system, so in Europe as well? And my second question is about the European Commission that is considering a review of EU merger rules to encourage cross-border consolidation, including in the banking system, while national authorities continue to pose obstacles, to such transactions. So what's the ECB's view on these? I'm not making names.
Ma'am, please apply.
महाराज, हमसे लीजिए ना होम लोन।
महारानी, हमसे लीजिए।
70 से भी ज्यादा बैंकों के बेस्ट होम लोन ऑफर, डेडिकेटेड एजेंट सपोर्ट, घर बैठे आपकी सेवा में। चुनिए अपना मनपसंद ऑफर।
ऐसा लग रहा है कि हम होम लोन नहीं ले रहे, हमारा स्वयंवर चल रहा है।
स्वयंवर नहीं,
स्वयं घर महाराज।
बेसिक होम लोन्स का स्वयं घर।
म्यूजिक तो अलावा मेरा दूजा प्यार मैं नहीं बताऊंगी। चलो फिर शुरू कर दें स्पॉटिफाई के नाल गलबात। आ जाओ। चल जाट गले जाटनिया, चल जाट गले जाटनिया, सर पे दुपट्टा लेके जाट गले जाटनिया, सर पे दुपट्टा लेके जाट गले जाटनिया। सब तो पहला ਜਦੋਂ ਮੈਂ ਗਾਣਾ ਲਿਖਿਆ ਉਹ ਗਾਣਾ ਨਹੀਂ ਸੀ, ਉਹ ਇੱਕ ਕਵਿਤਾ ਸੀ। ਕਦੋਂ ਇਦਾਂ ਨੋਟਬੁੱਕਸ 'ਚ ਲਿਖਦੀ ਮੈਂ ਗਾਣੇ ਕਦੋਂ ਲਿਖਣ ਲੱਗੀ ਮੈਨੂੰ ਪਤਾ ਵੀ ਨਹੀਂ ਲੱਗਿਆ। ਤੇ ਇੱਕ ਹੋਰ ਸਟ੍ਰੇਂਜ ਚੀਜ਼ ਸੀ ਕਿ ਜਦੋਂ ਮੈਂ ਰਿਲੇਟਿਵਸ ਦੇ ਘਰੇ ਜਾਣਾ, ਕਿਸੇ ਦੇ ਘਰੇ ਜਾਣਾ, ਮੈਂ ਕਹਿਣਾ ਮੈਨੂੰ ਇੱਕ ਕਾਪੀ ਪੈਨ ਦੇ ਦਿਓ। ਗਵਾਹ ਨੇ ਉਹ ਲੋਕ, ਗਵਾਹ ਨੇ ਉਹ ਰਿਸ਼ਤੇਦਾਰ, ਅੱਜ ਮੈਨੂੰ ਕਹਿ ਦਿੰਦੇ ਨੇ ਕਿ ਅੱਜ ਸਾਨੂੰ ਉਹ ਚੀਜ਼ ਸਮਝ ਆਈ ਹੈ ਕਿ ਤੂੰ ਕਾਪੀ ਪੈਨ ਕਿਉਂ ਮੰਗਦੀ ਸੀ, ਕਿਉਂਕਿ ਤੂੰ ਇਹ ਕਰਨਾ ਸੀ। ਬਹਿ ਗਿਆ ਭੁਲੇਖਾ ਤੈਨੂੰ ਕਾਹਤੋਂ ਲੱਗਦਾ ਹੈ ਕਿ ਤੇਰੀ ਚੱਲੀ ਜਾਨ ਤੁਹਾਨੂੰ ਯਾਦ ਰਹੀ ਹੈ। ਨਿੰਮਾ ਲੋਹਾਰਕਾ, ਗੁਰਵਿੰਦਰ ਜਿਹੜਾ ਨਛੱਤਰ ਬਾਈ ਦੇ ਗਾਣਿਆਂ 'ਚ ਹੁੰਦਾ, ਰਾਈਟ। ਸੋ ਇਹ ਜਿਹੜੀਆਂ ਚੀਜ਼ਾਂ ਨੇ ਵੀ ਇਹਨਾਂ ਦਾ ਤੋੜ ਨਹੀਂ ਹੈ ਕੋਈ। ਆਈ ਡੋਂਟ ਫੀਲ ਕਿ ਆਪਾਂ ਤਾਂ ਖੁਦ ਇਹਨਾਂ ਨੂੰ ਸੁਣ ਕੇ ਵੱਡੇ ਹੋਏ ਆ ਨਾ ਬਲਿੰਗ। ਨਹੀਂ ਮਿਊਜ਼ਿਕ ਤੋਂ ਇਲਾਵਾ ਦੂਸਰਾ ਪਿਆਰ ਮੈਨੂੰ ਲੱਗਦਾ ਹੈ ਮਤਲਬ ਮੇਰੀ ਗੱਡੀ ਲਾਈਕ ਸਾਡਾ ਜਨਮ ਤੱਕ ਸਾਥ ਨਿਭੂਗਾ। ਬੱਕੀ ਨੇ ਮਿਰਜੇ ਦੀ ਬੱਕੀ ਨਾਲੋਂ ਘੱਟ ਥੋੜੀ ਹੈ ਮੇਰੀ ਗੱਡੀ। ਨਾ ਉਹ ਇੱਕ ਕਿੱਕ ਮਿਲਦੀ ਹੈ, ਮਤਲਬ ਫਾਕੇ ਵੱਢਦੀ ਜਾਂਦੀ ਹੈ, ਫਾਕੇ ਯੂ ਅੰਡਰਸਟੈਂਡ। ਫਾਕੇ ਗੱਡੀ ਐ ਬਰੂਦ ਵਰਗੀ ਰੱਖੇ ਰੌਂਦਾ ਨਾ ਯਾਰਾਨੇ ਲਾ ਕੇ, ਫੁੱਲ ਤੇਰੇ ਸੜ ਜਾਣਗੇ, ਤੇਰੇ ਫੁੱਲ ਤੇ ਸੜ ਜਾਣਗੇ ਮੇਰੇ ਹੱਥਾਂ ਵਿੱਚ ਆ। ਬਹੁਤ ਸਾਰੇ ਏਦਾਂ ਦੇ ਐਸਪੈਕਟਸ ਨੇ ਜਿਹੜੇ ਹਜੇ ਮੈਂ ਲਿਖਣਾ ਚਾਹੁੰਦੀ ਆ। ਹਜੇ ਵੀ ਜਿਹੜਾ ਟੌਪਿਕ ਮੈਨੂੰ ਲੱਗਦਾ ਵੀ ਚੰਗੀ ਤਰ੍ਹਾਂ ਲਿਖ ਨਹੀਂ ਪਾਈ, ਉਹ ਟੌਪਿਕ ਇਹੀ ਹੈ ਵੀ ਔਰਤ ਦਾ ਸੰਘਰਸ਼। जब हम थे तब सिर्फ हम थे, लेकिन जब से हम आए तब से सब आए। ਹੁਣ ਜਿਹੜਾ ਹੋਇਆ ਪੰਜਾਬੀ 101 ਮੇਰੇ ਲਈ ਬਹੁਤ ਵੱਡੀ ਚੀਜ਼ ਹੈ ਉਹ।
Well, thank you for being so discreet about to offer the floor to my Vice President, whom I'm so grateful.
Well, good afternoon. If you look at our recent financial stability reports, we have been dealing with private credit quite a lot. And we have paid a lot of attention to private credit and the potential risks that private credit and private equity, private markets in general, have posed for financial stability. And, well, the exposure in Europe of private credit and private markets in general is much more limited than in the US. Nevertheless, we have seen that the market is growing and, these kind of activities are exponentially growing in recently and lately. What are, the main problems that we have identified here and that we have indicated in our previous reports? The first one is opacity, lack of transparency. There are some difficulties in order to know, the valuations of the assets that they have in their portfolios. And even lately, you have seen that some of them, they have started to incorporate what they call continuation funds. It's an indication that there were some problems in terms of, the liquidity and the value of these assets. There is another issue that we have paid a lot of attention that is quite opaque, that there is no transparency. That is the leverage of this kind of instruments. And finally, we have seen as well that, there are, in the case of some private credit funds, they have started to limit redemptions and to impose what they call gates. This is an indication of all the problems that I have indicated before, that I have signaled before. And, it's a clear indication that, there are liquidity mismatches in this kind of funds. The interconnection with the banks and the non-banks is something that we have analyzed quite in detail. As I have said before, in the case of Europe, it's much more limited, the exposure to this kind of instruments. But, well, it's something that we are following closely. And for sure that what is happening in the US could be, a sort of leading indicator. Nevertheless, I repeat again that exposure in Europe is much more limited of the European banks to this kind of instruments. So it deserves and it merits attention. I think that we need, much more transparency with respect to the operations of this kind of instruments. And, well, the links and the interconnections with the banks is something that, for sure that the SSM is looking very carefully.
Interested in India's evolving large cap companies? Presenting ICICI Prudential Nifty Next 50 Index Fund, a simple way to invest in companies that are next in line after the Nifty 50 companies. This index fund tracks the Nifty Next 50 Index, which consists of 50 companies ranked 51st to 100 by market capitalization from the Nifty 100 universe. The scheme invests in the same stock and in the same proportion as the index, aiming to mirror its performance as closely as possible, subject to tracking error. So why consider this scheme? It offers exposure to companies in India's evolving large cap segment. There is no need to select or track individual stocks. It has relatively lower fund management costs as compared to actively managed funds, and it can be accessed even without a demat account. This scheme is suitable for investors looking to invest in emerging large cap companies with long-term growth potential, with recommended investment horizon of 5 years and above. To sum it up, here are some key features of this fund. If you're looking to invest in tomorrow's blue chips with ease and clarity, ICICI Prudential Nifty Next 50 Index Fund could be the right fit for your portfolio. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
And, we are always keen to see the work produced by the Commission. We know that the 28th regime was released yesterday. We're going to look at it carefully. Obviously, on the state aid and on the encouragement of mergers, we will be looking at that also attentively, including in the banking sector.
Next question goes to Henrike Adamson of the German weekly Wirtschaftswoche. Henrike, please.
Thank you for taking my question. So just coming back to core inflation again, you've said that you've better understood the mechanisms, how energy prices translate into second round effects. Could you maybe expand more on that and how it has maybe structurally changed? Because before, oil price increases maybe haven't had such a big effect on core inflation before, and after 2022, maybe it's different now. Just the effect on the core inflation. Thank you.
Well, thank you for your question. We're back to difference with 2022. I think another point that we have to keep in mind is that back in 2022, when the shock hit, inflation was already at 6%. So that's a big difference with where we are at the moment, where latest reading was 1.9, and we had inflation at target in the medium term. So that's a major difference. I think the labor market is also quite a bit different. And I'm not saying that to avoid your question, but I think all this actually matters. And the fact that we have a labor market which is, solid, but not as hot as it was back in 22, where we had shortages of labor and a different bargaining position, will also play a role. Caveat though, inflation expectations have a lot to do with the memory that corporates have of inflation. And back in 22, the memory was dating way back. Now the memory is rather fresh because people have seen inflation. So the reaction function that they will have in terms of investment, in terms of wages negotiations, in terms of consumption, that is going to be informed by fresher memory of inflation that went high and that we managed to bring back to 2%. I think the third element, which is different as well and that we will have to be attentive to, is that while it was a major supply shock to begin with, in 22 we had the pent-up demand and a demand shock element about the situation that we faced. Now, there's one thing that I want to mention, because I'm going to have to run. I'm sorry to say, because I need to catch a plane to go to Brussels, because I have to be there at around 5:30. When you look at the scenario analysis that will be published later on, don't forget to keep in mind that our scenario work does not factor in any monetary policy measures. So the numbers that you will see are without monetary policy, whereas the baseline includes what is anticipated by markets as at the cutoff date. So that's a big difference before you jump to conclusions. So I wanted to just mention that before I say goodbye and see you on the 30th of April, another time.
Bye-bye.